Hey everyone, and welcome to another deep dive. We've got some seriously interesting stuff to unpack today. We're diving into market trends, looking at the volatility that's been shaking things up lately.
Yeah, we've got some pretty fascinating articles and research on some specific companies and
Right,
sectors.
like we got to talk about these stock movements, and
Yeah.
some of the market reactions have been, well, pretty surprising, to say the least.
Definitely. I think the current market sentiment is really interesting. One analyst, Jeremy Siegel, he's predicting a possible correction.
A correction, wow.
Yeah, he's pointing to stretched valuations and saying, growth expectations are becoming more moderate.
Hmm. It feels like, that it's kind of lines with what's been going around in Benzinga.
Absolutely. And it's interesting for anyone who's following these market trends, It does make you wonder if things are a bit too hot right now.
Yeah, that feeling you get when you're like, is this going to last?
Exactly. And the upcoming CPI print, that's going to be huge, like really important. For sure. It'll give us, a much clearer idea of where inflation's headed and how the Fed might react with interest rates.
So we're all waiting with bated breath for that.
Pretty much. And it's definitely more important to keep an eye on than the recent PPI data, which, by the way, was cooler than expected.
Interesting. Okay, so let's get down to some specifics. Tesla, for example.
Mm.
I mean, that surge has been insane, over 90% since the election.
I mean, that kind of surge, probably not sustainable in the long run.
Right.
Even with, Elon Musk and his connection to the new administration, that kind of rapid growth had to pull back eventually.
Makes sense. It had to come back down to earth at some point.
Right. And that's what we're seeing now.
But here's the thing. Morgan Stanley, they just raised their price target for Tesla. What's up with that?
Well, their optimism, it's rooted in a long-term vision, They're thinking about autonomous ride sharing and robotaxi services.
They're looking way ahead.
Exactly. They're not just focused on the market as it is today. They're thinking years down the line.
So like imagining a world where Tesla's a big player in self-driving taxis.
Exactly. That's where Morgan Stanley's focus is. And there are some concrete developments supporting that vision. Like reports show significant improvements in their self-driving tech, specifically in highway miles without disengagements.
Fewer disengagements.
Yeah.
That's huge for those who are betting on autonomous driving, right?
Oh, absolutely. It's critical.
Yeah.
Because it shows how well that technology is performing in, real world situations.
For sure. The fewer times the driver has to take over, the closer we are to, truly autonomous vehicles.
Exactly. Now, Rivian, they just straight up outsold Ford in the U.S. electric van market. Crazy, right?
That's a huge win for Rivian. Definitely shows they're gaining popularity, especially with like businesses.
Oh, yeah. Big time. But, there's always a but.
Always a but.
You got to consider the whole picture here. Despite the sales success, Rivian, still dealing with pretty significant financial losses.
So their long-term sustainability, that's a question mark.
Kind of, yeah. Makes you think back to their stock performance last year. After Volkswagen invested, remember?
Yeah. It peaked and then down it went.
Exactly. So while this recent win is impressive, you got to be cautious. It's all about that long-term financial health.
Okay, let's shift gears. KB Home, they just knocked their Q4 earnings report out of the park. Beat EPS estimates, revenue estimates, and home deliveries and net orders are way up. No wonder their stock is surging.
Right. But we can't ignore those devastating California wildfires, can we? They're going to have a massive impact on the whole home building sector.
Absolutely.
And it's not just about rebuilding, Think about potential labor shortages in the construction industry.
Yeah, like will there even be enough skilled workers to meet that increased demand for rebuilding?
Exactly. And then you've got the whole interest rate situation, always looming,
Always influencing whether someone buys a home or not.
Yeah. Okay, now here's a bit of a curveball, all right? Rumors are swirling that Elon Musk might be interested in, get this, buying TikTok's U.S. operations.
Hold on, wait.
Yeah.
TikTok? That's unexpected.
Right, especially with that deadline for the potential TikTok ban, coming up fast.
No, wait, TikTok already said that's pure fiction.
Yeah, they did. So we've got like this crazy mix of speculation and denial. It really makes you wonder what's actually going on. Like, what's Musk really up to?
Right. And how would something like that change the whole social media landscape?
Huge questions for sure. Okay, switching gears again. Some Meta investors, they're urging Zuckerberg to do something bold with all that cash the company's sitting on.
Bold, huh? What are they thinking?
Well, they're suggesting he invests a chunk of it in Bitcoin. as a hedge against inflation.
Bitcoin, wow. That is bold. More and more companies are adding it to their balance sheets, right?
They are. So the question becomes, how would this play out for meta investors? It really depends on their views on cryptocurrency.
Some might see it as a smart move to protect against inflation, while others might be like, whoa, that's a risky bet.
Exactly. It definitely stirs up a debate about the role of crypto in a company's investment strategy.
Let's move on to semiconductors. Analyst Vivek Arya is predicting a broadening rally in the industry, says it'll be fueled by the projected dominance of AI in 2025.
Makes sense, right? We've already seen how AI narratives can move stocks,
Oh,
and that trend, it's not going away anytime soon.
so the AI hype train keeps chugging along.
Pretty much. And, it's not just hype. There are some real advancements in AI that are, driving innovation and creating those investment opportunities.
Okay, so let's talk about a different kind of investor now. Derek Golden-Smith. He actually made bank by shorting quantum computing stocks,
Yeah, he basically saw this disconnect, right, between the crazy high valuations of those companies and their actual revenue.
which is like non-existent for most of them.
Exactly. Many are still pre-revenue, making those valuations seem super inflated.
I mean, that seems like a really risky move, going against a sector that everyone's so hyped about.
Oh, it is risky. But Derek's a smart trader. He uses both fundamental analysis and technical analysis.
So he's not just looking at a company's potential, he's digging into market trends,
Hmm.
patterns, trying to find the best times to buy or sell.
Exactly. He's all about timing his entries and exits, managing risk, and maximizing those profits.
Smart.
He specifically talked about a stock called RGTI and how he skillfully rode those volatile price swings, even those crazy short squeezes.
That's really understanding how those fundamentals and technicals work together.
Right. And get this, Derek's skepticism about quantum computing. It was actually echoed by Jensen Huang, the CEO of NVIDIA.
NVIDIA's CEO.
Yeah, he expressed doubts about, how useful the tech really is in the near term.
So even some of the industry leaders are hesitant about the immediate impact.
For sure. But here's the thing. Derek sees that these stocks, despite those shaky fundamentals, they offer unique trading opportunities on both sides of the market.
So you can profit whether you're bullish or bearish on the sector, as long as you understand how to navigate the volatility.
Absolutely. It's a good reminder that market dynamics, they can create opportunities,
Mm.
even in sectors that seem maybe overvalued or too speculative.
Right. Okay, we got a question from a listener. They're asking about order types and entry prices, specifically how to manage a smaller account.
Ah, that's a good one. If you're working with a smaller account, I wouldn't recommend day trading.
Yeah, day trading can be risky.
Oh, it is. Especially with a smaller account, it's easy to lose your capital.
For sure.
Instead, focus on finding setups you can repeat, identifying patterns that consistently work, and understanding how specific stocks behave.
It's about finding those strategies that work for you, not chasing those quick profits that might not last.
Exactly. For example, learn about short squeezes,
Hmm.
how they work, how to spot stocks that might be vulnerable to them.
Okay, that makes sense. But what about entry prices? How do you know when is the best time to, buy or sell?
Well, volume is key there.
Yeah.
Looking at the volume can help you identify those stocks that are actively traded and have the potential for, big price moves.
Gotcha.
High volume. It usually means strong interest from either buyers or sellers,
Right.
which creates those opportunities for profit.
So pay attention to the volume. And of course, before you risk any real money, practice. Paper trading is your friend.
Couldn't agree more. It lets you test those strategies without putting your actual capital on the line. Build up that confidence first.
Now let's circle back to those California wildfires. Of course, the human impact is the most important thing here. But we also need to look at the potential investment themes coming out of this.
Absolutely. There are going to be a lot of sectors seeing increased activity. We're talking insurance, construction equipment, waste management, lumber.
And then there's the whole need for temporary housing.
Huge, yeah. Demand for things like RVs is going to skyrocket with people displaced from their homes.
It's heartbreaking, but it's also going to impact so many industries.
It really is. And it makes you wonder, right? Will people start moving away from California?
Because of the risk of more wildfire.
Exactly. And if they do, what does that mean for moving companies, logistics providers, the
Mhm.
housing market in other states?
It's a chain reaction. And historically, these kinds of disasters have led to, inflationary pressures.
Oh, for sure. All that increased spending on rebuilding, disaster relief, it ripples through the whole
But
economy.
it's not just about short-term impacts. It could end up accelerating existing trends.
Exactly. Things like sustainable building materials, fire-resistant construction.
We're looking at long-term shifts in the market, all because of this tragic event.
It's a reminder of how much markets are, influenced by so many things. Natural disasters, technology, consumer behavior.
Yeah, it's a lot to keep track of.
It really is.
Speaking of companies with tons of cash just sitting around, what about Apple?
Mhm.
They always seem to be in the news, especially after those earnings reports. What are they going to do with all that money?
Right. It's like everyone's trying to guess buybacks, dividends. Maybe they'll finally make a big acquisition. Who knows? It's kind of fun to watch, though, see how they use all that financial power. Apple's not afraid to make big moves, shake things up.
Oh, yeah. Like, remember when they shifted their whole focus to services? That really changed things for the whole tech industry.
Exactly. Even a giant like Apple can, pivot and reshape the whole landscape.
Yep.
Speaking of reshaping landscapes, what about this electric vehicle market? It's still on fire, and you can't talk about EVs without mentioning Lucid.
Lucid. Yeah, they've been getting a ton of buzz, especially with those luxury EVs they're making. But they've also had some production hiccups, haven't they?
They have, yeah. And those challenges have definitely impacted their stock, which highlights a really important point about this whole EV market. Execution is key.
So you can have the best tech in the world, but if you can't actually, build and deliver those vehicles, it's going to be tough to compete.
It's not just about innovation, it's about operational efficiency, too. You got to get those cars out there. Speaking of companies facing challenges, what about Palantir? They've been a bit of a roller coaster for investors, right?
They have their data analytics platform. It's really powerful, but they've also been, well, kind of controversial,
Hmm.
especially with those government contracts.
Yeah. It brings up a tricky ethical question, doesn't it? Like, how do we balance the potential benefits of, this really powerful tech with the potential risks?
Especially when you're talking about government surveillance and data privacy and all that.
Right, exactly. It's a complex issue for sure. And investors are trying to figure out, how to evaluate a company like Palantir.
Yeah, do the technological advancements outweigh the ethical concerns? That's a tough one.
It is. Each investor has to decide that for themselves, ultimately. Okay, let's switch to healthcare. Always a hot topic, especially for investors looking for those big breakthroughs.
Definitely. There's always excitement around companies working on new treatments, especially in areas like oncology and gene editing.
Absolutely. Those fields hold so much promise. We could be talking about cures for diseases that just a few years ago seemed incurable.
But it's also, high risk, high reward. Not every promising treatment makes it through clinical trials, right? And the FDA, they have to approve it.
And that regulatory landscape, it's complicated. It can take like years, even decades sometimes, for a new drug to get approved.
It's a long road. But for the ones that make it, the impact can be huge. Not just for patients, but for the companies too. Okay, let's talk about a new kind of investor. Retail traders, they've been really shaking things up lately.
Oh, yeah, the rise of meme stocks, the power of social media,
Yep.
it's changed the whole game.
It has. It's really interesting to see how social media platforms have given individual investors a voice.
Absolutely. They can coordinate their trading, share ideas. It's almost like a democratization of the market.
Yeah, that's a good way to put it. It's exciting to see, more people getting involved in the market. But it's also important to remember the risks, right?
Yeah.
Chasing quick gains based on what you see on social media, that can be dangerous.
Absolutely. It's more important than ever to have a solid investment strategy. Understand the risks, do your research, don't just follow the crowd blindly.
Right. Okay, here's a sector that often gets overlooked. Cybersecurity. It's been quietly outperforming.
Oh, yeah, it's been killing it. And with all the cyber attacks and data breaches happening, companies are making cybersecurity a top priority.
They have to. Protecting those digital assets is more important than ever.
And the demand for cybersecurity solutions, it's only going to grow. We're seeing so much innovation in that space. New tools, new technologies. It's an arms race.
It is. Between the hackers and the security pros.
Yeah.
And the stakes are super high.
No doubt. All right, let's shift gears to Alibaba. That's a Chinese e-commerce giant, right? They've been facing some regulatory hurdles lately from the Chinese government. It's a good reminder that investing in international markets always comes with unique risks.
Yeah, you're dealing with political uncertainty, regulatory changes. It can be a wild ride.
It is. Always good to remember the importance of diversification. Don't put all your eggs in one basket, especially when you're investing internationally.
Speaking of global concerns, what about inflation? It's still a big issue, isn't it?
It is. And the Fed, they keep raising interest rates to try to cool things down, which has definitely impacted the market.
Especially those growth stocks. They've taken a hit.
Yeah, because investors are getting more risk averse.
Yeah.
And it creates so much uncertainty, Will the Fed manage to land this plane softly, or are we headed for a recession?
That's the million-dollar question. And these upcoming earnings reports, they might give us some clues.
Definitely. It'll be interesting to see how different companies are performing, in this kind of environment. Can they keep those profit margins up with rising costs? Are we seeing signs of consumers spending less?
It's a real test of corporate resilience, for
Yeah.
sure. Okay, what about the energy sector? It's been a mixed bag, hasn't it?
It has. Oil and gas prices, they've been soaring, but at the same time, there's this huge push for, renewable energy sources.
It's a weird dynamic. We need energy security, which is driving demand for those fossil fuels, but we also got to address climate change.
Right, which is accelerating the shift to renewables. It's complicated.
It is. But that shift towards renewable energy, it's creating some really interesting opportunities for investors. Solar, wind, battery tech.
Oh, yeah. It's a complex landscape with a lot of moving parts, but it also has massive potential. All right, let's talk housing. The market's been crazy hot, right? Low interest rates, strong demand, prices going through the roof. But are there any signs of, things slowing down?
That's what everyone wants to know. Is this going to last?
Well, it does seem like things might be cooling off a bit. Rising interest rates are starting to make things less affordable.
Right.
We might see some price adjustments coming up.
It'll be interesting to see what happens. Will the housing market keep going up? Or will we see a correction?
Good question. Both buyers and investors are going to be watching this very closely. Okay, here's a sector that's been quietly booming. Logistics. Yeah. With the rise of e-commerce, and these complex global supply chains, companies that can move stuff efficiently, they're in high demand. We're seeing huge investments in warehouses, delivery networks, the whole infrastructure.
That makes sense. You got to get those goods where they need to go.
Exactly. And the companies that can leverage technology to really optimize their operations, they're the ones winning. Logistics, it often flies under the radar, but it's a crucial part of the global economy.
Speaking of the global economy, there's a lot of uncertainty out there. Geopolitical tensions, inflation, slowing growth in some parts of the world.
It's a tough environment for investors.
Yeah. It really highlights the importance of being prepared for, potential volatility. Diversification, risk management, thinking long term. That's how you navigate these turbulent times. Okay, let's explore something totally different. The metaverse. Everyone's talking about it.
Right. It's this concept that's still kind of evolving, but it's basically this persistent, immersive digital world where people can interact, with each other and with digital objects.
In companies like Meta, formerly Facebook, right? They're going all in on the metaverse, pouring money into VR and AR.
Oh, yeah. And it's not just tech companies either. Brands, retailers, even celebrities are trying to figure out how they fit into this metaverse thing.
It's still early days, but it feels like the metaverse could really change how we, work, how we play, how we connect with each other.
It could, creating a whole bunch of new opportunities and probably some challenges too for investors. All right, let's talk clean energy. That's a sector that's attracting a lot of ESG-focused investors, right? The ones who care about the environment and social responsibility and all that.
Yeah, more and more people are realizing that we need to transition to, a more sustainable energy future.
And investors are putting their money where their mouth is.
Yeah.
They're backing companies, developing renewable energy tech, solar, wind, battery storage.
Yeah, that sector's seen huge growth lately.
It has, and it's only going to accelerate. Governments are setting these ambitious targets for reducing carbon emissions.
It's not just about the environmental benefits either. Clean energy is getting more and more cost competitive.
Exactly, which makes it a pretty attractive investment. Okay, let's switch gears to biotech. Always a hotbed of innovation. Companies are constantly trying to develop new therapies, new treatments for every disease you can imagine.
It's amazing what they're doing with gene editing and personalized medicine. It feels like we're on the verge of a revolution in healthcare.
It does, yeah. But it's important to remember biotech is inherently risky. drug development. It's expensive, takes a long time, and not everything works out.
For sure. Investors really need to do their research.
Absolutely. Understand those risks before jumping in.
Let's talk about something that's been impacting businesses across the board.
Yeah.
Supply chain disruptions.
Don't get me started. It's a mess out there. The pandemic, geopolitical stuff, even natural disasters.
Yeah.
It's all created these bottlenecks and delays.
It's making it harder and more expensive for companies to get the stuff they need.
It is. It's a
Yeah.
complex problem. No easy solutions. But the companies that can adapt their supply chains, make them more resilient and flexible, they're going to have a huge advantage.
Absolutely. And it's also creating opportunities for companies in logistics, transportation, warehousing. Everyone's trying to solve these problems. Okay, artificial intelligence. AI is everywhere these days.
I know, right? And it's getting more sophisticated all the time.
Healthcare, finance, manufacturing. AI is changing everything.
It's true. And it has the potential to, totally revolutionize how we live and work.
Yeah.
But we got to be careful, too. Think about the risks.
Definitely. Investors need to understand what AI can do, who's leading the charge, and what are the ethical considerations.
Absolutely. As AI gets more powerful, we got to make sure it's used responsibly. All right, let's talk crypto. The cryptocurrency market has been a wild ride.
It has. Bitcoin, all those other digital currencies,
Yep.
skyrocketing to record highs, then crashing back down. It's crazy.
Also volatile, for sure.
It's attract like the diehard believers and the super skeptical critics,
Right,
and everyone in between.
right. And it's still so new,
Wow.
constantly evolving. So do your research. That's all I can say. Understand those risks before you jump in. Speaking of volatility, let's not forget about the stock market in general.
Oh, yeah. It has a long history of ups and downs, right? We've seen some incredible bull markets, followed by those sharp corrections that make everyone nervous.
It's just a reminder that investing always has risks. You got to have that long-term perspective.
And a good strategy for managing those risks.
Mhm.
Diversification, asset allocation, staying informed about what's happening in the market. It all matters.
Absolutely. Okay, let's talk about a trend that's really changed how we shop. E-commerce.
It's everywhere. The
Uh-huh.
pandemic definitely accelerated the shift to, buying everything online.
Yeah.
And it doesn't seem to be slowing down.
Nope. Companies that can deliver that seamless online shopping experience, they're the ones winning. And we're seeing so much innovation in delivery, logistics, personalization. Everyone's trying to keep up with how consumers are shopping online.
Speaking of evolving needs, the job market is going through some massive changes too, right?
Oh, yeah. Automation, remote work, the gig economy, it's all reshaping the future of work.
Creating new opportunities for some, but also some concerns about jobs disappearing.
It's a complicated issue, for sure. A lot to unpack there.
All right, what about the sharing economy? That's been a big trend in recent years.
It has. Platforms like Airbnb, Uber, TaskRabbit. It's amazing how people are sharing their assets and skills. It's disrupted so many traditional industries.
And created tons of opportunities for entrepreneurs and consumers, too.
Yeah.
It's a perfect example of how technology is changing, well, pretty much everything.
It is. Speaking of technology changing everything, social media, it's become this powerful force in our lives.
We use it to connect with, friends and family, stay up to date on the news, even shop.
It's everywhere, but it's not all sunshine and roses.
Social media can be addictive, right?
Oh, yeah. And it can be used to, spread misinformation, manipulate people's opinions. We got to be aware of the downsides.
Definitely. It's a powerful tool, but it can be used for good or bad. All right, let's talk about something a little more serious. Income inequality.
Yeah, that's a big one. The gap between the rich and the poor, it's been widening for a while now.
And that has serious consequences, right? Not just for the economy, but for society as a whole.
Absolutely. It's a complex issue, but we got to find solutions.
Things like progressive taxation, investing in education and job training,
Yeah,
having a strong safety net. Those can all help.
they can create more opportunities for everyone.
Okay, last but not least, let's acknowledge the elephant in the room. The world is changing faster than ever, right?
It is globalization, technological advancements, climate change. It's a lot to keep up with.
It is. But it's also, a time of incredible opportunity.
It is. If you stay informed, if you can adapt, if you think critically, you can navigate these challenges and maybe even, help create a better future.
Okay, so let's circle back to those California wildfires. We talked about the immediate impact on certain industries like construction and housing. But there's a deeper layer to consider, isn't there?
Absolutely. Think about the psychological impact. How do these events change people's perceptions of risk?
So will people be less likely to invest in areas that are uh, prone to natural disasters? How will that affect insurance premiums,
Hmm.
real estate values?
Exactly. It's not just about the physical damage, it's about uh, how people react, how their behavior changes. It could shift investment trends in a big way.
And it shows how interconnected markets are with, you know, human psychology.
It does. You can't just look at the numbers. You got to understand how people are feeling, how they're reacting.
That's a great point. Wow, we've covered so much ground today. It's been quite a deep dive from market sentiment, individual stocks, all the way to those bigger implications of the California wildfires.
It really has a whirlwind of info, but it really shows you got to stay informed, be ready to adapt, and always be open to new ways of thinking this market. It never stands still.
It's always changing. And
Yeah.
like we saw today, there's a lot to keep your eye on, so much happening across different sectors, and the global picture is changing fast.
Fast is right. But amidst all the change, all the uncertainty, there are also some incredible opportunities.
There are opportunities for growth, for innovation, and those who can like adapt and kind of anticipate what's coming next, they're going to be in a good spot.
Right. Knowledge is power, especially now.
It really is. Well, as we wrap up this deep dive, I want to leave you with one final thought, something to think about.
Oh, here it is. As we navigate, this ever-changing landscape, it's worth considering the role technology plays, how it can both amplify and maybe even mitigate the impact of events like those California wildfires.
That's a good one.
Can we use technology to build a more resilient future, a more sustainable future?
Big questions, for
Wow.
sure. And we encourage all of you listening to keep thinking about these themes. How might they influence your own, decisions, your perspectives?
Stay curious, keep learning, and don't ever stop asking questions. That's how we navigate this crazy, exciting world.
Couldn't agree more. And we'll be back soon with more deep dives, more insightful conversations, and hopefully some thought-provoking analysis. Until then, happy investing.